Hello guys, how are you? I have the pleasure to welcome you today to our second session of our masterclass in financial markets. Today the topic will be over-the-counter markets and listed markets because I would like you to differentiate well these two types of market infrastructure. The listed market is typically an electronic market operated by an exchange. The exchange is a legal entity, and this legal entity runs a server that collects from market players all the buying and selling orders. The trading session will have a certain schedule from 1 hour to the end at another hour, and during this trading session all the orders will be queued in the order book as we discussed yesterday when we were talking about market microstructure, and the orders, once they match, there will be trades done for a certain volume. There are two types of investors in terms of market access on an electronic market. Some of them will have direct market access. Typically, those will be bigger companies that have a large portfolio and that operate multiple deals both on the buy or sell side during the day. Smaller companies, they will access the market through brokers, and the broker on his side will place the order in the market through his own computer. This is what I can tell in terms of mechanics of the electronic market. And I would like to add something which is important. The exchange market, it has several missions. Among them, I would list that this market should bring transparency, liquidity, and reliability. The reason for that is that we have nowadays strong regulation, and as well on these types of market, the assets are assets that are used by a huge population of investors, funds, speculators, and in order for them to make aware decisions on their actions, they need transparency and reliability to be assured by the exchange. So now in a second step, I would like to share with you the mechanics of a market which is called over-the-counter market or OTC market. Here, the server is replaced by humans. These humans are the brokers. They have important role in this market because they will collect through the phone or a chat the orders from the buyers, the orders from the sellers, and they will exercise the activity of price discovery. In a certain way, they should feel and collect the orders in order to make the market trade. This mission implies several qualities that a broker should have in his pocket. One of them is to be able to analyze the market, because by analyzing the market and discussing the market with buyers and sellers, they will both feel confident to give and place their orders to the broker. So trust is very important in an over-the-counter market. And this market is in general less regulated than a listed market. So in some cases, for companies to be able to participate in this market, they will need to sign among them special agreements in order to guarantee that they can execute their financial commitments from the profit or the losses they might have one with another. As well, for these markets, in a similar way that we discussed about the electronic markets, we will have different assets, and these assets could be equities, oil, bonds, electricity, or others. But I would like to point out that in most of the cases in an over-the-counter market, the products that are traded are somehow less liquid than the products traded on a listed market. In all cases, the over-the-counter market will trade with a standardized product, and there will be an organization or a company who will post at the end of the day a close price, which is most of the cases the last trade price. And this company or organization should benefit from a certification in order to be sure that the information that will be published to the market will be unbiased and reliable. That's what I wanted to share with you today. I wish you a good weekend as we are Friday, and I will be patient until next week so we can continue our discussions, probably with the topic of the major asset classes that we have nowadays trading in the markets. See you and thank you for your attention. Bye.